Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton,
I'm Bob Scarborough.
and we are the FAIRtax Guys. You
I,
see,
I
I
had to
have moved.
look at it first. I had to look down to make sure I still had my hands gripping on the banner. This is
Uh-huh.
something that you need when you go to any particular gathering where there may be media cameras, or you may have an opportunity to stand in a big crowd and you throw out the
I,
banner.
yeah,
Uh,
I still think you ought to go to the next Wake Forest basketball game and sit behind the basket and hold that up while they're shooting free throws. You know, the camera shot usually is behind the shooter toward the basket, and it picks up the crowd behind the basket. So you need to go out and to the next Wake Forest basketball game and do that.
I can get tickets. I know a man that has some that has some tickets to go there, and
Uh,
they've had a pretty good crowd at most of the games, from what I understand. We have tickets from the station here uh,
mm-hmm.
away, and so that might be in the offing, as long as it's an afternoon game, because I go to sleep about 6:30 in the evening now, so 7.
Yeah,
I'm not up.
yeah,
I'm not
has to
up.
be one of those Saturday afternoon games. Well, I don't know. I have to fly up there and sit with you. Well,
Yeah. Oh, yeah. You could
speak.
leave in the next 15 minutes, it looks like.
I'm saying, speaking of flying, I have moved out of the railroad yard, and this is actually a view out the window of the TWA Hotel at JFK Airport in New York City. Now, if you're listening on the radio stations or to one of the audio podcasts, you'll have to go over to Rumble or our YouTube channel and call
Right.
this up and see what this actually is. But anyway, that's kind of enough for small talk to open the show. Let's get to work here.
Yeah. Congress.gov. Congress.
Absolutely. Our weekly look at the craziness that the Congress critters are trying to put into the tax code. And it's amazing what we do. Again, you put the words Internal Revenue Code in quotes in the search bar at the top of the Congress.gov page. And as you do that, on the day we're recording this, 1,368 hits on that search. And of course, not all of those are proposals to change the tax code, but most of them are. And headlining our parade today is H.R. 6979. This is a bill to amend the Internal Revenue Code to provide a credit to small businesses for research activities related to the mitigation of certain drug threat. When was the last time your radio station was threatened by a drug?
When we ran out of aspirin, because we just give each other headaches all the time over here. So we have a stash in the break room. Yeah.
Yes, but this is to the Internal Revenue Code is messing with well, seems like everything we've hit on there for the past several weeks here provided a credit of some kind. So
Yeah.
this is a credit for small businesses for research activities related to the mitigation of drug threats. What about small businesses that don't get this credit because there aren't any drug threats? And that's just the point of the thing. You have got groups of people that get credits and other groups of people that don't. And just by definition, that ain't right.
And to make it fair for everybody, you wipe out the tax code completely with the fair tax. HR 25 completely eliminates the Internal Revenue Service and all the loopholes that are there, and special considerations that allow people to uh, work their own magic, if you will, in their particular business or industry.
Well, there's really no magic about it. You just fork over some cash to a lobbyist, and the lobbyist forks over the cash to the Congress critters, and the one who has the most lobbyist money wins.
And that's typically the way it goes. And I still feel like the folks in Congress know that this is the best thing for the country, but they are still trying to figure out a way to put themselves in that path
Yeah,
of
the
continual
the ta-
great.
the, that tax code has become their gravy train, and they don't want to see that derail because it's just ungodly expensive to run for reelection or reelection. It's just That's an entirely different issue. We got to get it so it doesn't cost the doggone much to run. So you don't. Okay, let's move on. This is HR 6965. Now, this is a big one. To amend the Title 27 of the Public Health Service Act, the Employee Retirement Income Security Act of 1974, and the Internal Revenue Code to establish requirements with respect cost sharing for epinephrine injectors under group health plans and group and individual health insurance coverages. I can think of 3 words for that one: Hall of Shame.
Yeah, mark it right now. Put a big red X on it and send it to the file for the end of this year. Yeah.
Yeah, to establish, that's crazy, requirements with respect to cost sharing for epinephrine injectors. I guess those little EpiPens and stuff they're talking about.
Yes.
Under group health plans and group and individual health insurance coverages. I got a better idea. Why don't you just have a tax code that doesn't have all that junk in it, that is only concerned with collecting revenue for the federal government and doing it in a very fair, very transparent, very easy to administer, easy to enforce way, which means that we get rid of the income tax and replace it with a fair tax. That's why we do this every week, show the people what crazy stuff is in our income tax code. And if this is the proposals to get in, there's stuff that's equally crazy that's already in there.
Very true.
Yeah, if you're having insomnia one night, just go look up publication 17 and start to. You look at publication 17, and one of the first things it says, the tax code is complicated. Well, so yeah, it is, and they seem to be proud of the fact that it is, and that they can do all this stuff.
It's by design. It is so complicated that even the most learned tax lawyers have people that work with them to make sure that they aren't missing anything, any little nuance or some change that might have an effect across the tax code. If you change something over here, it's probably ripple over through to some other potential benefit or hindrance on another item that might affect somebody else within the tax code. So you gotta they're probably you probably get a pretty good job, working for somebody, making sure that the little nuggets don't fall off the table when you're trying to figure out how the tax code ripples through from one side to the other.
Absolutely. All right, let's scoot through these last couple of them because we've got a neat little thing we want to get to there on FairTax Power Radio. Next item on the list, as they say, is HR 6938 to amend the Internal Revenue Code to reinstate the deduction for personal casualty losses as it was in effect prior to the enactment of Public Law 115-97, commonly referred to as the Tax Cuts and Jobs Act. Again, this refers to just the constantly shifting nature of the tax code. First, you'll get a deduction, then they'll take it away, and then they'll want to reinstate it. And the tax code is constantly changing. And you as a small business person know this better than anybody. You cannot make sound business planning when you don't know what the tax code's going to be 6 months from now.
It's crazy. Just absolutely crazy.
Absolutely. All right, one more. This will be HR 6857. This is the Simplify and Expand Health Savings Accounts Act. And this one actually does have a little text in it, so let me go dig that up. And it says, as soon as the computer screen pops up for me, to amend the Internal Revenue Code to modernize health savings accounts and for other purposes. Health savings accounts are, again, similar to the 401k thing. You can fund them with pre-tax dollars. The money you put into them doesn't count as taxable income in the year that you put it in there. But I got another better idea. Why don't we just get rid of the income tax code, let everybody save for their health savings needs or for their educational needs or for buying a new car, for buying a house. Let everybody save for whatever they want to save for, totally tax-free. There's no such thing as after-tax dollars because you no longer tax income. I think that's a better idea.
I love the idea. I love that. Yeah, and that's what the fair tax provides. And again, I think the Congress critters, as we so affectionately refer to our elected officials up there in Washington, are just trying to figure out a way that they can continue their gravy train prior to implementation, because they know that something has to be done in a very definitive way. Otherwise, we're all going to be on a sinking ship here before too long, fiscally speaking.
All right. Let's move on here. What we want to do here on FairTax Power Radio, we've been digging into the research section of fairtax.org for quite a while. And there's another article, or actually another more like a little chart thing that we want to go over this time. This is under the research tab under the taxes and tax reform section. There's a bunch of things in that section of the research tab. This is about the eighth one down. This is a comparison chart between the current income tax, the fair tax, and the flat tax. And, people, we get this all the time. People say fair tax, flat tax, in the same sentence as if it's, they're kissing cousins or what have you. But the fair tax and the flat tax are just so totally different. The fair tax is a tax on consumption. The flat tax is still an income tax. You still taxing income. You still have to report your income on a tax return. You still have to send that tax return to the IRS. You can still be audited if the IRS doesn't like what they see. The flat tax is still an income tax, and it doesn't stay flat. We have seen this so many times.
That's absolutely right, and that's the thing that you hear a lot on any news report about taxes. And I think it's confusing to a greater number of people because, we're just sort of looking at, minute parts of it. And there's not a lot of information out there that's given in one sitting. The flat tax becomes a very similarly sounding word too. Same 4 letters, F, fair tax, flat tax. And so, oh yeah, that sounds great. And
okay.
What we're about is to kind of explain how the fair tax compares with not only the current income tax, but also the flat tax.
It's the current income tax and the flat tax are the kissing cousins because they are both, taxes on income. And we talk about the flat tax. A lot of times that's just used as a generic description to describe a tax and where everybody pays the same rate. But there is actually a bill in Congress, and it's rather aptly named H.R. 1040.
Yes.
The Flat Tax Act. It's sponsored by Michael Burgess, a Republican from Texas. And what it does, it does not, let me say off the top, it does not simplify the tax system, because what H.R. 1040 does, it actually establishes a parallel tax system. You can make a one-time irrevocable choice between being subject to the current Internal Revenue Code, the income tax as it's currently run today, or you can choose to be subject to this flat tax, which after a standard deduction, there's standard deductions for each individual plus dependents as well. So again, not every dollar you earn is going to be taxed under the flat tax, but every taxable dollar is taxed at 19% the first 2 years and 17% the next year after that. And we looked it up, H.R. 1040, as of the day we speak, has 0 co-sponsors. Mr. Burgess is standing alone in thinking that that's a good idea.
And that's a challenge for a lot of bills getting sponsorship, and that's where the political persuasion comes into play. Where, hey, if you support my bill for this, and I'll help you get some people over here on the other side for what you're working on, and that's the way politics works. Even at the level. We're in the 118th Congress now, and we're probably in the final year of that Congress. And every year, these bills get reintroduced, and they essentially reset, and you have to co-sponsor or sponsor at the beginning of every session of the new Congress. And so that's where we are today.
All right. Well, let's look at this chart. The type of tax is the second thing. Of course, the current income tax is an individual income tax. There's a corporate income tax. payroll taxes, self-employment taxes, capital gains taxes, estate gift, and alternative minimum taxes. All of that junk is in the current Internal Revenue Code. The fair tax, again, is a single rate national sales tax on the final retail consumption of new goods and services. No exemptions, no loopholes, no deductions, no picking winners and losers. It's just as simple as it can be. The states will administer it, the states will collect it and remit it back to the federal government. And again, the flat tax, just a one-time irrevocable election between the current system and a flat rate on every taxable dollar after your standard deductions. Now, there's one kind of halfway cool thing in the flat tax legislation, the 1040, that says it will take a 2/3 majority vote, not just a simple majority, but a 2/3 supermajority to either raise the rates or lower the standard deductions. So I'll give them kudos for that, but it's still a much better idea to get rid of the whole thing and replace it with a fair tax.
Yes, everything comes off the table, is wiped out. Business inputs are not taxed. Education tuition, which is a big thing, is not taxed under the fair tax. And
okay.
Want to talk about taxes that are replaced with the fair tax and the flat tax comparison?
Yeah, go ahead. Of course, that's not applicable to the current income tax because that's what's being replaced by the fair tax, the flat tax. Go ahead and finish that one out.
Under the fair tax, all income and payroll taxes, including self-employment taxes, capital gains and estate and gift taxes, and the alternative minimum taxes are replaced by nothing except the fair tax that you pay when you buy a new product or a new service at the cash.
Yeah, that's one of the things when you hear this all the time from people talking about the fair. Oh, it's going to increase the cost of living by 23%. They don't seem to want to let you know that the fair tax replaces all those other taxes that you're currently paying. There's not charged in on top of those other taxes that you are currently paying. So it's not going to come anywhere close to increasing the cost of living. Some will say 23, some will say 30%. Again, that's the differentiation between an inclusive and an exclusive tax rate. But right. It replaces all those other taxes, so you're no longer paying them. The fair tax just simply changes the point at which you're taxed from when you make your money to when you spend it. The amount of tax that you will actually pay under both systems is going to be relatively the same because the fair tax and the income tax or the fair tax was designed to replace the revenue generated by the income tax. So if you take it when you make it, or if you take it when you spend it, you're still going to be paying roughly the same amount of tax. Although most people are going to find the fair tax, they'll be paying a little bit less under the fair tax because the fair tax expands the tax base. Believe it or not, Bob, there are people out there who are evading the federal income tax. They don't file their 1040 forms. They work for cash under the table. They make their money in less than legal means. And I can guarantee that the drug dealer who's bringing down 6 figures a year selling heroin on the street corner is not reporting that income on a 1040 form, but he would become a taxpayer under the fair tax when he buys things with that illegal money that he gets.
That's right, because he's going to go buy food or groceries. He's going to buy a new vehicle, et cetera, et cetera. And so anytime that happens, anytime the money that is collected in that nefarious activity, he goes to the store to buy supplies, that's where he gets taxed. International travelers also fit into that category of folks that will begin paying into our treasury for the federal government's operation. It goes from 155 million to something like 250 million or some number like that as far as the numbers.
Yeah, you'd have to get a professional number cruncher to actually come up with that. But yeah, the tax base is extended to everybody who spends above the poverty level with the fair tax versus only those who decide that they want to fill out their income tax return and send it in under the income tax. So right. actually, the flat tax actually does replace some taxes.
That's right. Believe? It's the estate, gift, and generation skipping transfer taxes. However, the current payroll taxes are not replaced, and that's where the working poor and anybody that has a paycheck coming to them on a regular basis, that's where they get snagged, is that ridiculously defeating commerce payroll tax. We end up paying a lot of money out that way, and it's we don't feel it because it's taken out before we get our check, and we operate on this assumption that we're making a certain amount of money, but the federal government gets their money before we get to buy groceries or pay for our kids' education or anything else.
I mean, just as a matter of philosophical principle here, the withholding under the current income tax is the government telling taxpayers, "I am your highest spending priority. You will pay me before you buy milk for the baby, before you buy bread for the kids, before you put gas in your car, before anything. I'm going to get my chunk before you get yours. I am your highest spending priority." And just as a matter of principle, that is just flat wrong.
It really is immoral. It's just, it taxes on my mind so many times to hear stories of people that were working 2 or 3 jobs they have the first job to get an income. They have the second job. If they've got kids, the second job covers the expenses of having the kid in children in daycare or somebody to watch out for them. And maybe the third job is there to help pay some of the tax burden on the first 2 jobs.
It's just crazy. But again, with the fair tax, we like to say you feed your family before you feed the government, because the prebate gives you back all of your taxes that you pay on your spending up to the poverty level, which means you don't take a dime out of your own pocket until your spending exceeds the poverty level, i.e., until you have provided basic necessities for your family. And that's the right way to do it.
It is. And again, I said the income tax is immoral, and I truly believe that. We have been living in our own work that we do, not understanding that there was a time in the country where there was no income tax. And so we say, well, this is the only way to do it. No, there's another way to collect the taxes for the government. And as Bob P. said a minute ago, the difference is switching from income to consumption. And that's what the fair tax does, collects the same amount of money that the government gets now to operate. And then comes the battle of what are you going to do with that revenue? And we know that the income coming into the Treasury with the fair tax is going to be considerable. And then the question becomes, well, are we going to pay down debt, or what are we doing with all this money that's going to be in the coffers?
Oh, yes. All right. Well, let's skip one here and go to the progressivity and upward mobility comparison between the income tax, the flat tax, and the fair tax. The current income tax steeply accelerating marginal rate structures taxes those who have to save or earn more in a given period to accumulate wealth. That is, it's just, if you're trying to save more, if you earn more, they're going to tax you more. And it says the earned income credit tax households, those are the ones they face the highest marginal rates. Of course, the payroll taxes impose a regressive tax on labor, the most regressive tax on the book. It's kind of progressive, but it's regressive at the same time the current tax system is.
That's correct. Now, under the fair tax, the prebate untaxes spending up to the poverty level, literally untaxing lower income, poor working families. Since taxation is based on consumption under the fair tax allows taxpayers maximum choice as to the level and timing of taxation. You spend on essentials, excuse me, you're going to get a prebate. Everybody does. Pardon me, based on, I'm good.
Okay.
I'm coffee over here I might get in a second. Your spending dictates what you pay for the taxes. Now you have essentials. If you're working poor, you're going to get untaxed up to the poverty level. Bob P. is going to get untaxed up to the poverty level. I'm going to get untaxed, my family of 4, etc. We're going to get untaxed up to the poverty level based on what that number is that comes from the federal government on an annual basis, you're going to get it. And it's not an entitlement, because some people say, well, it's an entitlement. No, it's in advance of your spending that money, you're going to get it. And you decide what the essential needs of your family is going to be. And that's right out of the gate every month.
And that's another thing you hear some people say, well, we can't tax everything. You have to have exceptions. Let's not tax groceries. Let's not tax medicine. If you start, making those kind of exceptions, a bureaucrat somewhere has to decide what qualifies as groceries, what qualifies as medicine. And if you start having all of these exemptions, then you have to raise the rate on everything else in order to raise the same amount of money. It's just a whole lot easier to tax everything, give everybody back the taxes they pay on their spending for basic necessities, whatever those basic necessities may be. And then beyond that, you start taking money out of your own pocket to pay the fair tax once your spending rises above your the poverty level, which is, we got a fancy name for that in the fair tax, the family consumption allowance. But one thing you really want to do here is the fair tax allows taxpayers maximum choice as to the level and timing of taxation. This little chart doesn't mention it. No fair tax on used items. If you don't want to pay the fair tax on a shirt you need to buy for your kid, go buy it at Goodwill instead of at a Walmart or someplace like that. Right. You will not pay taxes on used goods. That is another beauty of the fair tax. It gives you that kind of choice. You've got flexibility over how much tax you pay to a much greater degree with a fair tax than you do with the income tax. We got about a minute and a half left, so let's talk about the progressivity and upward mobility of the flat tax real quick. Then we got to run.
Standard deduction under the flat tax results in progressive effective income tax rates. However, the retention of current payroll taxes, which we mentioned a moment ago, maintains the regressive tax on labor. You think it might be easier, but you're not getting rid of the Internal Revenue Service, nor are you getting rid of the income tax, which is a big problem for keeping anything that resembles the income tax, no matter what you call it, flat tax, whatever it might be.
Okay, again, we're looking at the fair tax, flat tax, income tax comparison chart that's found under the research tab at fairtax.org in the taxes and tax reform section. And we are slap out of time for this edition of FairTax Power Radio. There's a lot more here, so we're going to continue this next week. So be with us right here on the FairTax Power Radio, on our Facebook page, on our YouTube channel, or you can check us out on Rumble after the fact and listen to the radio stations up there in North and South Carolina. And that's going to do it for this edition of the FairTax Power Radio. Thank you so much for listening and sharing the videos. I'm Bob Paxton.
I'm Bob Scarborough.
We are the FairTax Guys, reminding you the fair tax is the only truly fair tax, and once you understand it,
you'll demand it.
So what do you need from me to get these taxes collected?
Glad you asked, because there is a fair amount of information you need to be aware of.
That's your tax plan?
Oh, no, this is just the revisions for this year's tax plan. What I need from you is you need to keep track of all of your income, as well as any taxes that you've already paid. Also, any gifts that you received or gifts you've given to churches or charities or individuals throughout the entire year. Do you do any side jobs?
Every now and again.
Great, because there's some more information about that right here. Everything you need to know right here. So just simply compile that, send it in to us. Be careful, make sure there's no mistakes. If we do find mistakes, or maybe we can fine you or, throw you in jail. So you might want to be aware of that.
And what do you need from me?
As an individual, nothing. As a business owner, or if you're doing side jobs, yes, you would have to collect taxes on that, but, it's all right here.
Can I get a copy of that?